Okay, folks, I think we're going to get started. I know there's a lot of there's a lot to cover, and there's already questions in the chat. So I think that's the best way to do this. I hope that you'll agree, so that we can get the program going. I'm going to turn this over to our friends at the New Jersey Department of Treasury, the Division of Taxation. I was a nervous wreck because internet went down, and down at Edgemont, and I was trying furiously to make this work on my hotspot, and I couldn't get it going. So I literally got in my car, and I think I got here in record time. I don't know, something about the tax, the tax department. I have to take care of things when it comes to the tax department. I know a lot of people have questions, and a lot of people have asked, well, is that the same thing as Anchor, Senior Freeze? There's a lot of confusion about the program. So I'm so happy to have the New Jersey Department of Treasury Division of Taxation here with us today. And they're going to talk about the Senior Freeze program and talk to you about how it works. Am I spotlighting James, right?
Yes, that's correct.
Okay. All right, so I'm going to let you take it away. And again, if you want to keep, you put your questions in the chat. If you don't know how to use the chat button, it's a little box on the bottom. It looks like a little bubble for writing things, and you could just write your question in there. If you don't know how to do that, we'll wait until the end, and then you can unmute yourself and ask your question. In the meantime, as James is talking, you can jot your questions down, and then at the end, we'll have time for those questions. Does that sound like a good plan?
Yes, thank you very
Okay,
much.
great. So if you could just keep yourselves muted during the presentation, that would be great.
Okay, so my name is James Birch, and I work for the New Jersey Division of Taxation. I am part of the training team here, which means I train both employees as well as doing outreach programs such as this. I have a couple colleagues who are working with me. Monisha Moore is going to be taking your chat questions, and later on, after the program's over, after the presentation is over, we will open this up if you have any further questions. Michael Kovacs will be assisting me on that. So today I'm going to be talking about the New Jersey Senior Freeze Program, also known as the Property Tax Reimbursement Program. Give me 1 second here. Okay. So the key contents that I'm going to be discussing is what is the New Jersey Senior Freeze Program? What are the eligibility requirements for it? What are the filing requirements? What kind of income standards are there? What are the base year changes, which I will discuss a base year later on in case there are people who are unfamiliar with what the term means. What kind of changes are coming up for next year? And finally, how can you contact us in case you need help? So first off, what is the program? This is a program that reimburses senior citizens or permanently disabled people for property tax increases. Anyone who applies for this must meet all eligibility requirements, which I will get into more detail later on. And any eligible applicant will be reimbursed the difference between their first year of eligibility, also known as their base year, and the application year. So there's an example on the screen here. It says, if John Doe's first year of eligibility is 2018, and his property taxes for that year were $5,500. When he files in 2022, 4 years later, his property taxes have been raised to $5,900. Now, he still has to pay the full $5,900. So the Senior Freeze program does not stop it from being raised. He still has to pay that full amount. However, when he applies for this, he will then be reimbursed the excess amount. So in this example, it will be $400. Here we have what the book looks like. This is the 2022 Form PTR1. This is for anyone who did not receive a senior freeze last year. If you did receive it, you would need to get a PTR2. So now that I've told you what the program is, let's discuss who is eligible for it. Anyone who is 65 or older as of December 31st, 2021, or receiving federal Social Security disability as of December 31st, 2021. The second requirement is you must have lived in New Jersey continuously for the past 10 years. So for this year, that would be December 31st, 2011. To give you an example, I have an aunt and an uncle who have lived in New Jersey for most of their lives. A few years ago, however, they moved to New York. They have since announced that they plan on moving back to New Jersey later on this year. Since they left the state, even though they didn't meet the age requirements, they would not be eligible because they have not stayed in New Jersey for throughout the whole 10 years continuously. The third requirement is you must have owned and lived in your current home for at least 3 years, which would be December 31st, 2018. And finally, well, not finally, there are a couple more, but you must have paid property taxes. Since this is a reimbursement program for property taxes have to be paid in order for us to reimburse it. So for a homeowner, you had to pay by June 1st, 2023. For a mobile homeowner, it had to be by December 31st, 2022. There are also income limits that have to be met. For 2021, your income had to be $94,178 or less. And in 2022, it had to be $99,735 or less. Like yesterday, I was talking to someone and he met all the other eligibility requirements. However, his income was $140,000. So even though he met everything else, he was still not eligible because he was over the income requirement. And this income applies to anyone, whether you are single or married. If you are married, you have to combine both your spouse's income. So if one spouse makes 40,000 and the other makes 50,000, you will still be eligible because you're under the requirement. However, if one made 40,000 and the other made 60,000, then you'll be over the income and you will not be eligible. On the next page, I have a chart of some of the income requirements throughout the years. As you can see, they've changed as prices have gone up, as wages have gone up, as everything has gone up, so has the income requirements. However, these incomes are not always set in stone. Sometimes when they do the budget, they find out they have extra money available, so they can raise the income requirements so the more people are eligible. Sometimes they find out they have less money available, so the incomes have to be lowered. If you look on this chart here, you can see there's different notes on some of the years, 2017, 16, 15, 14. These are all years in which the budget then changed the income requirements. On our website, we have a full listing going back to the beginning of the program, which was in 1998. So what are some ineligible things? A vacation home is not eligible. This is only for your primary home. A second home is also not eligible. So some people may have multiple homes they live in, but it's only whichever one is your primary home. Normally, we take whichever address is on your driver's license. Rental properties are not eligible. There are certain programs where renters are eligible to apply. However, for senior freeze, it's only for homeowners. Properties that have more than 4 units are not eligible. And any property with 4 units or less, but have more than one commercial unit are not eligible. Like sometimes you'll see an apartment where there's a business above the apartment and a business below the apartment. Because there's more than one commercial unit, those properties are not eligible. Also ineligible is any disabled, totally and permanently veteran who is receiving a 100% exemption from paying property taxes. As I mentioned before, this is a property tax reimbursement program. So in order to reimburse you, you have to have paid the taxes to begin with. Anyone who's part of a pilot program is not eligible. A pilot program is where instead of paying taxes, you pay a fee to your municipality. They're usually lower than what the taxes are. And since you're not paying the taxes, again, a pilot program is not eligible. Life estate and life tenancy. Sometimes one person may own a property, but they have someone else listed as life estate or life tenancy. You often see this where a child may own the property, but their parent has a life estate or life tenancy. In this case, whoever has the life estate or life tenancy is the one who can apply for senior freeze. They take precedence over the owner, and it must be specified in the deed or the lease, and you must show us a copy of that proving that you do have life estate or life tenancy. Okay, so I mentioned before that there are income standards that have to be met. Well, how do you figure out what they are? So all income must be reported, even income that is not reported on the NJ 1040. For example, Social Security benefits, pensions and retirement benefits, and unemployment benefits are not reported when you file an NJ 1040. However, they must be reported when you file for senior freeze. There are a few exceptions. The most common ones are the middle class tax rebate, paycheck protection program loans, economic impacts and stimulus payments, and income tax refunds, both federal and state. If you get a copy of the PTR booklets on pages 2 and 3, there is a full listing of all types of income that should be and should not be reported. So there's no guessing required. It tells you everything that you should count and everything that you should not count. So what are the filing requirements in case you have met all of the eligibility requirements? You must file by October 31st, 2023. So that's at the end of the month. Today is October 5th. So if you have not filed already, you should do it as soon as possible because you only have a few weeks left. If you have filed on our website, you can always check to see what the status is. There's a little chart here. So if you filed now, you will be in the bottom row that says between September 2nd and October 31st. And you can expect to receive a check sometime around December 1st, 2023. If you filed before that, there are different dates depending on when you filed. You must send us some kind of proof that you are 65 or older. For example, a birth certificate, a driver's license, or some kind of church record. Or you must send us a proof of your permanent disability, like the Social Security Award letter. These are things that only have to be sent the first time you file, because once you've already submitted the proof to us, we already know that you've met this particular requirement. You do not have to continue to do it every year. What you do have to send us every year, however, is proof that your property taxes were paid. Some acceptable documents include property tax bills for both years, so 2021 and 2022, and proof that you paid the taxes, such as copies of a canceled check or receipts for both years, or a copy of your Form 1098 as supplied by the mortgage company for both years. If, however, you do not have access to them, in the book, there is a verification form. There's a PTR 1A for a homeowner. You can take this form to your local tax collector and they will complete and certify part 2 of it. So in case you don't know how much your property taxes were or how much you paid, You can take it to the tax collector, give them this form, and they will help you with it. We have an example of what the form looks like. So you see part 1 must be completed by the applicant. Part 2 is completed by the tax collector, so they will fill that out for you. If you are a mobile homeowner, it's the same general requirements with a few differences. Instead of showing us proof that you paid your property taxes, you will show proof of your site fees that were paid. For example, you could show us a copy of the contracts and agreements for both years, along with proof of the amount of site fees, like copies of canceled checks, or a signed statement from the mobile home park management. If you don't have that, like just like a homeowner, a mobile homeowner also has a verification form in their book called a PTR 1B. In this case, they could take it to their owner or manager who would certify it. We have a picture here of what it looks like. See, part 2 to be completed by a mobile home park owner or a manager. So they would help you fill that out. For anyone who is deceased, as long as they met all eligibility requirements, you can still file for that person as long as they passed away after December 31st at 12:01 a.m. You would print their name and address on there, and above it, you would print that they are deceased and what date they passed away on. You may also be required to submit a copy of the death certificate. This can be filed by a surviving spouse, an executor, or any kind of personal representative who handles their property. So there are some differences for people who are filing for the first time and people who are filing continuously. For a first-time filer, you need to fill out a form PTR 1A. This establishes your 2021 and 2022 eligibility. It sets your base year, so your first year of eligibility at 2021, and your property taxes will be set at whatever price they were in 2021. And then, as if they have gone up in 2022, we would pay you the difference between those two prices. If you have filed continuously, so you had to receive this last year, if there is a break where for a few years you didn't file, you have to start over again. But if you are filing continuously, then it will be a PTR 2. Whether it's your second year, your third year, your fourth, it's always a PTR 2. This comes pre-printed with your base year already on it. So it verifies your 2022 eligibility, and you will receive the difference between 2022 and your base year. Occasionally, people may receive the wrong form. So what if you received a PTR 1, but you were supposed to receive a PTR 2? Since the PTR 2 comes printed with your base year already on it, you would have to call the Division Taxation for assistance. A PTR 1 you can print on our website because it's just a generic form for everyone, but a PTR 2 is specific to you personally, so you would have to call us to get us to send it to you. The number you will call is 1-800-882-6597. And you may be required to send in some documentation to show us proof that you are indeed eligible for the PTR 2. So earlier, I said there were income standards that had to be met. And here are the ways you can figure out some of the incomes. In the book, on the application, there is a line A. This is for Social Security or railroad retirement benefits. To find this information for your Social Security, you'll look on Form SSA 1099, Box B. For railroad retirements, you'll look on Form RRB 1099. Line B is for pension, annuity, and IRA withdrawals. You would find this on your NJ 1040 line 20A if you were required to file one. If not, you will see Appendix A. In the book, there is an appendix. There are also worksheets for these lines. So it tells you how to figure out all this information. Line C is salaries, wages, bonuses, commissions. If you receive this, you will have a form W-2 and you will report box 1. Again, there are instructions in the booklet. It tells you how to figure out all these lines, and there are worksheets for lines A, B, and C. That's why we highlighted these ones specifically. You would also have to add any tax-exempt retirement income, such as U.S. military pension or survivor's benefit, or any amount received for total and permanent disability pensions. Also, any distribution from a Roth IRA that you would have reported if it were a traditional IRA, except for the following: a direct rollover, a tax-free exchange, or a conversion from existing traditional IRA to Roth IRA. Again, there are specific instructions in the book that tell you how to figure out everything. So base year changes. As I said before, a base year is your first year of eligibility, and it sets your taxes for whatever year you were first eligible. But sometimes that year may change. For example, the income requirements for this year, for 2021, were $94,178. For 2022, they're $99,735. But what if your income has since gone up and you are now over that? Because you no longer meet that requirements, the income requirements, you would not be eligible to file for this year, which means next year you would have to file again and you would have to start over and your base year will be reset. Or if your property taxes go below the base amount. For example, I was filling out someone's application recently and they met all the other requirements and we went through everything, but then we found out her taxes have actually gone down. And since this is a reimbursement program, there was nothing for us to reimburse her for because she was now paying less. So she was not eligible. She would have to reapply and her base year would be reset. Or if the applicant moves. But as I mentioned before, one of the requirements is you must live in your home for 3 years consecutively. However, if you are already part of this program and you just move to a new property, as long as it's still in New Jersey, instead of waiting 3 years, you would just have to wait 2 years to file. And any added assessments may also change your base year. So what if you do move? You need to fill out a form PTR1C. Again, this is for people who are already enrolled in the program, but they moved to a new New Jersey residence. This will establish your eligibility after 2 years. Normally, the division will send you this form. If for some reason you have not received it, you can contact us to get your PTR 1C. And this is for only people who are already enrolled and moved to a new location in Jersey. So I also said there are assessments that could change it. If your property was reevaluated, such as the municipality appraised it and they increased or decreased your property value, that could also change your base year. If your property taxes were lowered because of the reevaluation they did, then you would not be eligible and your base year would be reset next time you apply. But sometimes your property taxes increase, like if you did some kind of assessment, like assessment that you did on your own, like adding an addition. So this could also result in an adjusted base year. You would not need to figure anything out. The taxation will make this adjustment for you. You can also appeal an assessment. if you do not agree with what has been decided. You must notify taxation, however, in order to appeal it. If it is determined that you were due a greater reimbursement than what we gave you, then we will issue a check for the difference. So if you received $100, but it was determined you actually are supposed to receive 200, then you will receive that additional $100. If, however, it's determined you were due a smaller reimbursement, then you would have to pay that back. So if you receive the $100, but it finds out you were only supposed to be paid 50, you would have to pay us that 50. So prior year filings. There sometimes people have not heard about this. I've talked to numerous people who say this is the first year they've ever heard of this program, despite it have been around for many years. Sometimes people just have not always heard about it. Sometimes they forgot to file. I talked to someone recently who said she has filed in the past and she just completely forgot to do it last year. Sometimes people are eligible, but they don't know. So you can still file for previous years, but you must fill out a PTR 1 for each and every year that you were eligible that you did not file. You will not receive any kind of reimbursement for those years because the check dates have already passed. However, it can reset your base year to whatever year was missing. So if you've been eligible since 2017, but this is your first time filing, you won't be reimbursed for all those previous years. Sorry, my lights here just went out. All right. You won't be reimbursed for all those previous years. However, it will reset your base year to 2017 and whatever the property tax was at that year. Okay. So that's all for 2022. But we have some changes coming up for next year. This was signed into law on June 30th, 2023. It expanded and enhanced the senior freeze benefits beginning next year. It increased the income limit to $150,000, so now more people are eligible to file. It also eliminated the 10-year New Jersey residency requirement. So remember I mentioned my aunt and uncle who moved out of New Jersey before? They were not eligible because they have not lived in New Jersey. They have eliminated that qualification. However, you would still need to live in your home for 3 years. Finally, we have some resources for you in case you need to contact us. We have some numbers. Our main customer service center is open Monday through Friday from 8 a.m. to 4:30 p.m. The number is 609-292-6400. We also have a number that is specific to the senior freeze information. That they're open from Monday through Friday, 8:30 a.m. until 5:30 p.m. The number is 1-800-882-6597. Now, Anchor is another property program that we have. Some people think you are only eligible for one or the other, and that is not true. You can apply for Anchor and also apply for this. If you have questions regarding Anchor, they are open from Monday through Friday, 8:30 a.m. until 5:30 p.m. And their number is 1-888-238-1233. We also have in-person assistance. There are regional information centers located throughout New Jersey. They are in Fair Lawn, Freehold, Galloway, and Trenton. They are normally open until 7 p.m. on Wednesdays and until 4 p.m. the rest of the week. They will also have some extended hours on Saturdays. Fair Lawn will be open on October 14th and 28th on Saturday until 2 p.m. from 10 a.m. to 2 p.m. Freehold will be open October 14th and 28th from 10 a.m. to 2 p.m. on Saturday. Galloway will be open on October 21st, and Trenton will also be open on October 21st. So if you cannot make it during the week, you can still go there on a Saturday as long as it's between 10 a.m. or 2 p.m. on the dates listed here. You should make sure to bring a government issued ID, for example, a driver's license, any kind of relevant document, for example, a deed, a lease, a death certificate, something that shows what kind of income you receive, something that shows what kind of property taxes you paid. Any document you have, you should bring. Or if you're representing somebody else, you need to bring an M5008R. This is similar to a power of attorney, but in Jersey we don't quite have a power of attorney, but this is an equivalent to that. Okay, here's how to reach us on social media. We have a Facebook, we have X, which was formerly known as Twitter. We have a YouTube account, an Instagram account, and an Instagram account. So you can contact us on any of these ways. So that completes the presentation. We'll now open it up in case anyone has any kind of questions. You can unmute yourself and ask anything.
James, do you want to, I don't know if you can see, I'm going to share your screen.
Okay.
And then there's some questions already in the chat. I don't know if you can see those, but I can scroll up and read them to you. Good morning. I want to know if I need to count money that I transfer from a 401k to a Roth account in my total income. That was the first question.
Yep, those questions have already been answered.
Okay. Okay.
So we're kind of down at the bottom.
Do you want to take over? Do you want to just read those questions out?
I'll chime in if you can hear me.
Sure, absolutely.
Hey, everybody. My name is Mike Kovacs. I work for the Division of Taxation. The first question I see is the $150,000 income limit for 2023 gross or net. It's neither. It's still going to go by the standards of whatever is listed on the PTR income worksheet. So that is what you're going to go by when determining if you're eligible. It's not gross. It's not net. It's not based off federal. It's not based off state. It's based off the PTR 1 or 2 income worksheet. And the next one I see is if you're a condo in a complex with 28 units, are you eligible? Yes, you are. The multiple unit properties are generally one property or split up into multiple units with commercial units. Condominium owners, you're an owner just like a homeowner. So condominiums, you can absolutely apply. When will the 2023 eligibility PTR1 form be available? Generally, they are available in February or March. So if you don't receive one in the mail, you can go on our website on those dates and get the form. Our website is nj.gov/taxation. So the forms are generally available, again, February to March every year. The deadline is usually in July, and most times it gets extended to October, but plan on July being the deadline, unless you hear otherwise. Do towns have some? Yes, some property tax offices or libraries may have some forms. Again, you can get them off our website, which is nj.gov/taxation, or you can visit any of the regional information centers that Jim mentioned. Do you need appointments for in-person centers? They would prefer you make an appointment, but they will take walk-ins, so it's not really a necessity. You can make an appointment. They would probably appreciate that. But if you're just in the area and want to walk in, they'll be happy to help you. A good question. Do both homeowners need to be 65 years or old? No. For a married couple, as long as one of you qualifies, either based on age or disability status, you can file. The difference between this and Anchor is this is a reimbursement specific to each taxpayer based on their individual property taxes. And we, like Jim's explained, it gives you back the increase, whereas Anchor is just a flat benefit amount for renters and homeowners. So they are two different programs. They are calculated different ways, but if you qualify for both, you can receive both unless the combined benefits exceed your actual property taxes. We're not going to benefit you more than you're actually paying in taxes. And I know we're scheduled at 12:30. We'll be happy to stick around and answer questions till then. But if not, the presentation proper is over, so you are free to leave. But again, we will stick around if you have any questions. I guess I'll put myself on camera here. Thank you very much. Thank you all for attending. Did you say that the PPT is available online? If you're talking about the PTR, the actual form itself, yes, it is available online at nj.gov/taxation. Oh, the presentation. The presentation can be sent to the organizer and she can send it to anybody on her email distribution list. So we can do that after the presentation if you like.
Yeah, that would be great if you want to send it to me. Yeah, people would like to refer. That would be great.
So just one clarification.
Yes.
So I did file years ago when the income limits were quite a bit less. And they urged me to file even if I wasn't, to set my base year. But then I found it so difficult to apply and to get all those numbers in a different way that I didn't do it in subsequent years. So you're saying I could do that. I just have to go back to a PTR 1 and do each year sequentially.
It's only, you can go back only if you were eligible but did not file. But if you were not eligible based on income, you were not eligible. So you can go back as many years as you were actually eligible, but for whatever reason did not file. But if you go over the income limits, you can't go back for those years. You're not eligible for those years.
Okay, but it looks like I would be eligible. But
okay, then absolutely you can go
very
back.
often, I guess the states actually sets it lower than what the actual beginning income level is.
Correct. What you're referring to is these programs are all dependent upon the budget. So obviously the applications go out in February, March. We have an income limit in the application. Then the budget rolls around and they realize they only have so much money to give out for these programs. So they'll lower it generally to like $70,000. If that's the case, you are still eligible if you were under the original threshold. So file a PTR 1 for that year, and you can still reestablish a lower base year. Absolutely.
Very good to know. And then I would apply for each year. I'd have to do that for each
you got to do a PTR 1 for each year. Mail them in, drop them off at the office, whatever you prefer. Give them time to process, and then give us a call or visit an office, and we have to perfect it into a PTR 2 so you get your higher reimbursement amount.
Okay. I think I understand. Okay.
Yeah. So what I'm saying is once you send in the PTR 1s for all the missing years, it's not something that we're going to automatically know to do. The system's not going to know to make it into a PTR 2. So just give them time to process. After you mail them, call us up and explain to whoever answers, look, I sent in a bunch of PTR 1s. They told me to give us some time. I need you to pretty much make this current year PTR 2. They'll know exactly what you're talking about.
Okay. Great. Thank you very much.
You're very welcome. Thank you. I'm just going to go out of order here for a second. Just to reconfirm, you can't do any back year to establish base year unless you were 65 for that year. Correct. You have to meet the eligibility requirements. And any chance of a similar anchor benefit presentation? Absolutely. Reach out to the coordinator. We do anchor presentations just like this. We'll be happy to do one. Give us some dates and we'll set it up. And again, yes, thank you, everyone. Thank you.
Thank you.
All right, I think that's it on the questions. So I'm going to end this Zoom, and I want to thank the Department of Taxation and James and Mike and Monisha, and hope you feel better, and everybody else that was on the call and our participants. Oh, there's another question or just a comment saying very helpful. Thank you. We will I'm really happy that so many people attended, and there's an interest, and obviously there's a need. So I'm really glad to know that we can have a similar program for the Anchor
Absolutely.
program. So yeah, I'll reach out to you guys. Really appreciate it.
Our pleasure.
Thanks, everybody.
Thank you so
Thank
much.
you.
Thank you.